Hey, what's up? I'm Russ. This is Dapper Dividends. Those are 2 authentic ounces of gold, and that's one for me and one for my main man, Warren Buffett. So he announced on Friday after market close that Barrick Gold bought 20.9 million shares of ticker symbol GOLD, valued at $563.5 million. Berkshire followed my lead. Obviously, I knew who my one listener in Omaha is. It's obviously Warren Buffett. He liked what he heard on my podcast. And while he heard me buy 25 shares, he said, you know what? This guy's got something to it. So we're going to get into a little bit about Barrick Gold, what I like about it. Am I going to sell it? Am I going to hold it? Check it out. So this is the famous Warren Buffett quote. Thank you, Pinterest. Gold gets dug out of the ground in Africa or someplace, then we melt it down, dig another hole, bury it again, and pay people to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their head. I get it, and as I say all the time, it is not an investment. It is a store of wealth. It is something that leapfrogs inflation. So it makes sense that he wouldn't want to put money into gold. But if you put it into a company that digs it out of the ground, they can make a profit, they can pay a dividend, their share price can increase. So owning that paper gold is something that is definitely very prudent for an investor like Warren Buffett. All right, so in here inside the Schwab account, you can see on June 12th, 2020, I did buy 25 shares at $24.58.5. Spent 615 bucks almost on that, so it's gone up a little bit since then. Pretty good. Missed the run up earlier on, but I figured that was as good as a time as any to get in on the surging price of gold. Charles Schwab does have an outperform buy rating of 23, the percentile 23. You can see, so they're just coming in at a buy. I pull up Morningstar, and you can see that they have a $16 fair value estimate, and this is from August 11th. And right here, you can see that they are 64% overvalued. All right, so CFRA, you got 4-star buy rating, 12-month target price of $30. So these analysts are all over the place with where they're going. Cool thing, look at this. Their beta on CFRA's page is only 0.29. So what that means is that if the market moves up $1 and a company has a beta of 0.29, like Barrick Gold, that means it will only go up 29 cents. But if the market drops $1, it's only going to drop 29 cents. So that's kind of a cool little thing to look at. So one thing I like to look at seeking alpha for, they're concise. I really like using Market Beat for my information, but one thing I'm going to show you that's pretty cool here is if you go to the SEC filings, you click on the 6K. So this is like a 10Q, which is the quarterly report. This is for Barrick Gold. It's because they are from Canada. They're a Canadian company. They have a 6K they file with the SEC, and it gives us as investors the information that everybody in Canada would have. Benjamin Graham, the famous investor, had said you should look at earnings reports and you should go from back to front because they put a lot of the nastiness and a lot of stuff they want to hide in the back of those reports. Yeah, so you can see here they're trying to point out that debt's down, free cash flow's up, which is good. You want to see free cash flow up, and the dividend. So I'm a dividend growth investor, so this is something I love to look at, and I'm going to show you a neat little thing to do if you want to do your own due diligence. You can see that they increased the quarterly dividend by 14%. I don't think that's sustainable. We are in a gold bull market, so I think they're taking advantage of that, and there's going to be a lot of new investors coming in, especially with Berkshire getting in. With that being said, just be careful. Just know that it is spotty. And if you scroll down a little bit, I like to look at this. So just be careful with this. As you can see, the 5-year compound annual growth rate, negative 12.32%. So just be a little bit careful with that. Payout ratio is pretty low. It's only 28%. That is off earnings, so that is really good to see, really strong. And one last thing with the, this goes for any report, any filing that's in the SEC. Does help if you just do Control F, and I see typed in dividend here already. So type in dividend, and I like to see what's going on with the dividend, so you can put in any word you're looking for, free cash flow, any kind of phrase. And you can see here they increased it by 14% to 8 cents a share. And just something to be careful with. And just something to keep in mind. And last but not least is my favorite market beat. So on market beat, just go to the analyst opinion right here, and you can see the thank you. And you can see that the price target upside downside, they have a consensus of 2407, which they predict has a potential downside of 10% from the current price, which is going to go up on Monday. So just remember that this is all over the place. Nobody knows where gold is going. The saying that the future will always surprise us always is in full effect, especially with gold. And I really like market beat. I could go on and on about it. If you don't know what market beat is, you're not familiar, check it out. It's similar to Seeking Alpha. I really like their dividend page because it gives me a very quick snapshot of what their dividend looks like. And as you can see, Florida man, enough of Florida man, get him out of here. So you can see that it was pretty stagnant, and sometimes it is tough to tell, as it does say 1 year of consecutive growth. Sometimes with foreign companies, as I said, you can see them jump up or down a little bit, and that'll be because of the exchange rate between the currencies. So sometimes they can increase their dividend, but it'll look like it was decreased, but it's just because of the exchange rate. And currently, so 59% based on cash flow, getting up there. I'd like cash flow dividend payout ratio to be under 70%, so it's still okay. I think they're going to be good for a while, and I'm basically in for the ride. And you can see, this is why I love this website. Fantastic website. All right, then we'll close it out here just looking at the stock chart right here. I like going to stockcharts.com. Very nice, very straightforward. Now I put in these parameters for the moving averages. I like using a 20-day exponential moving average. So that just tells you this is the last 20 days, this blue line here, that is the last 20 days, and they just divide the closing averages or the closing price all together and then divide it by 20, but they give a little bit of a weighting recency bias. So it's a little more accurate. So 27.89, you can see it's below that, and it has been hugging the 50-day, which is 26.80. So if you want to trade, if you're a trader, you know, we're going to jump up on Monday because of the Warren news, so you kind of missed your opportunity. But yeah, it's been nice being up there in the 30s. And then let's just see what the RSI. So this bottom indicator here, the RSI, relative strength index, or relative strength indicator I like to use, is if we're ever above 70, you know it's probably going to come down in price. And it definitely did there, went down to the 22s. Yeah, it's just something to look at. When this is pointing down, it means it's in a downtrend or it's getting ready to potentially dump. And if it's pointing up, it means it's potentially going to keep moving up. It's late. I haven't explained that very well. I did work today. I had a busy job all day, so it's going to be opening up on Monday above the 20-day EMA. But you can see where we were. It was in 12 bucks in March, and gold dumped with everything else. I don't know why everybody was selling, but they were. Made no sense to me. Everybody panic sold. They sold Bitcoin, stocks, gold, anything they had to sell, people were selling and apparently just buying toilet paper. So this is something that I am going to hedge. Actually, let's do one thing and pull up the weekly and see what that weekly chart looks like. So each of these candlesticks is a weekly candlestick, and yeah, it wasn't doing too well, but this has been gold. Gold's been running up, and it's running up with it. And of course, good old Yahoo Finance. You can see Barrick. Just want to point out, so it's all over the place. It does have a buy rating, and the current average analyst target, which is 20 analysts, give it $32.38. So it's gonna be a hot stock this week, and we're gonna see what happens. Obviously, news is all over the place about Berkshire and Buffett going in on Barrick Gold. So I agree with Warren that this is just not a good investment. This is something that protects your wealth, helps you leapfrog inflation, and virtually anywhere on the planet that people still want gold, this is going to have value. So I like to keep a little bit in the house as a store of wealth, something to protect the dollars that I had earned. I traded them in. I converted them into something that will stand the test of time and has withstood the test of time. So I'm probably going to continue to hold Barrick Gold. I like them for the dividend. Hopefully they're going to keep growing that dividend. But if gold comes crashing back down and the demand dries up, I would expect that they're going to cut that dividend again, as they have done in the past. So thanks for watching. Check out one of my other videos, and I'll see you next time.